For years, I traded the same way most retail traders do. When I first started learning trading, I began with bar charts. Like many traders, I spent countless hours studying technical analysis, trying to understand how markets move and how professional traders make money. Eventually, I discovered candlestick charts. I became fascinated with them. At the time, one of the books that had a huge influence on my learning was Beyond Candlesticks: New Japanese Charting Techniques Revealed by Steve Nyson. Like thousands of traders around the world, I started memorizing candlestick patterns. Bullish engulfing, bearish engulfing, doji, hammer, shooting star, morning star, evening star. I learned their names. I learned what they supposedly meant. And I believed that if I could just memorize enough patterns, I would become a consistently profitable trader. But that never happened. The reality was very different. Some trades worked, many trades failed. I would see a perfect candlestick pattern, enter a trade, get stopped out, and then watch price move exactly where I expected after I was already out of the trade. It was frustrating. At the time, I didn't realize something very important. I understood the candle, but I didn't understand the context. And trading candlesticks without context can be dangerous. A bullish candle in the middle of nowhere means very little. A bearish candle in the wrong location means very little. Without understanding where price is located within the larger market structure, candlestick patterns alone are often unreliable. I also discovered another important lesson. Many traders try to trade candlestick patterns on very low time frames, the 1, 5, and 15-minute charts. The problem is that these lower time frames contain a lot of noise. The lower the time frame, the more false signals you will encounter. Over time, I realized that higher time frame candles carry much more weight. Daily candles, weekly candles, monthly candles. These are the time frames institutions pay attention to. These are the time frames that reveal the true story of the market. And when you learn how to read them correctly, they can provide incredible insight into market direction. What changed everything for me was understanding that there are really only 3 categories of candles: continuation candles, reversal candles, and consolidation candles. That's it. You don't need to memorize dozens of candlestick names. You don't need to become a candlestick encyclopedia. You simply need to understand what the market is communicating through price. But even then, something was still missing. I still wasn't achieving the consistency I wanted. That's when I discovered smart money concepts and institutional market logic. I started studying liquidity, market structure, fair value gaps, order flow, institutional behavior. And suddenly everything began to make sense. I realized that candlesticks were only one piece of the puzzle. The real edge came from combining candlestick analysis with liquidity and market context. Instead of asking, what candle pattern is this? What is the market trying to accomplish? And where are institutions likely positioned? What is the market trying to accomplish? And where are institutions likely positioned? Once I combined smart money concepts with candlestick formations, my trading improved dramatically. I became more selective. I stopped chasing random setups. I developed a structured framework for identifying high probability opportunities. I began passing funding challenges. I became a funded trader, and eventually I made one of the biggest decisions of my life. I left my banking career. I became a full-time funded trader. That journey is the reason Fundex Trading Academy exists today. I created Fundex because I wanted to help traders avoid the mistakes I made. I wanted to simplify the learning process. Inside the Fundex framework, I teach traders how to combine market structure, liquidity, SMC, and institutional price delivery. The goal is simple: to help traders pass funding challenges, become funded traders, and start receiving payouts. I also provide the same tools that I personally use. One of those is my engulfing bar play indicator. This indicator helps identify high-quality engulfing candle setups in real time. Combined with proper market context and liquidity analysis, it becomes an incredibly powerful tool. But tools alone are never enough. The real edge comes from understanding why a setup works. That's exactly what I teach inside the Fundex Masterclass. If you're tired of failing challenges, I invite you to join us. Inside the Masterclass, I'll show you the exact framework that helped me transition from a banking career to full-time trading. You'll learn how to read market structure, institutional price delivery, and develop the confidence needed to pass challenges. Because the goal isn't just learning how to trade, the goal is becoming a funded trader and building the freedom that comes with it. I look forward to helping you on that journey. I'll see you inside the Fundex Masterclass. Click the link below and start your funded trader journey today.